Welcome back. Royal LePage is out with its 2025 Canadian first-time homebuyers survey, and despite rate cuts and growing inventory, the survey finds many potential homebuyers are choosing to delay their purchase plans, intending to hold off for at least another year. So we're going to bring in Phil Soper, CEO of Royal LePage, with more. Thanks for coming in.
Oh, my pleasure.
13% of Canadian adults working towards their first home, but a lot saying they're going to delay. What does that look like in comparison with the last couple of years we've seen, where people really weren't getting into the housing market at all?
It's a bump. And if you look at those people that say they're going to move into their first owned home in the next 2 years, it's a substantial bump. The interesting thing, as you said in the introduction, is people are saying 12 to 24 is when I think I'll move, which is pretty telling, because if you're
12 to 24 months.
Yeah, 12 to 24 months. If you're that close, it means you've talked to your bank, you're already looking at homes, you're ready. Something's holding you back, though.
What do you think that could be?
It's the research shows it's uncertainty around trade. So the broader macroeconomic issues are filtering down to young people looking at their first homes.
In the U.S., what you've seen is because of the 30-year mortgages, there's this incredibly low transaction volume because the people that have mortgages can continue to afford their homes. Prices haven't necessarily dropped to reflect that yet. In Canada, it seems to be rebalancing quicker. That's one advantage to our market. However, you've got this falling market now that people are maybe saying, hey, let's see how far it goes as well. Do you think that's a factor? Are you seeing that in the research?
It was definitely a factor in 24 and to a certain degree in 23, but when rates were coming down rapidly from high, the research showed that people were waiting. They said things are going to be more affordable, and they were betting, correctly as it turns out, that home prices weren't going to pop. So it's a game, right? If the borrowing costs are going down and house prices going up, you may lose. But if they're flat, which they have been to a large extent, and rates have gone down. But now most people are saying, yeah, we think we're near the bottom on borrowing costs. It's more the uncertainty around their future. They just don't know how this is all going to manifest itself in terms of their jobs, and that's what the uncertainty is.
Lots of uncertainty right now. It's also interesting when you look at the condo market, which has been sinking as well, right? Like usually first-time home buyers, a lot of the time their first home is a condo. Your survey finds most would like a single-family detached home, obviously. But does this have anything to do with what we're seeing with the condo market right now?
It does in Toronto. The condo market in Toronto is the oversupplied market where the majority of our rental stock was made up by landlords who were small business people. In other words, individual investors. So when rates popped and prices started falling, the investors couldn't make the math work. They tend to be highly leveraged, a lot of debt to the equity in the home. So those 8% rates, I mean, it just didn't make any sense. So you lost a lot of those people, and now, as you say, people always prefer detached homes. It's just they see condos as the route into the market, and in Toronto, there's uncertainty around what values in condos are going to do. So.
On the detached side, more big announcements from the government. We'll see if they actually flow through. What do you think going forward on the supply-demand factors for that market?
Well, we've seen a softening in new construction, understandably so, with the demand side soft. But the housing shortage hasn't magically disappeared. We don't have enough homes for the number of households we have in the country. Although with the population data that's coming out, that will rectify itself. You know, there's economic consequences of that. But in general, this kind of a market correction isn't good for housing dynamics in the long run, because builders stop building, demand builds, and then it typically gets unleashed in a pop in demand, and you have a spike in home prices. I don't see that in the short term, because we've actually got a nice balance of supply and demand outside of Toronto condos in the country right now.
I found another interesting part of your survey is many buyers continue to need, it said many buyers continue to need financial support from their families.
Yes.
Most do not, though. Is that a change from before? Because I feel like a couple of years ago, many people couldn't buy a home right now without support from family and friends. And it seems as though what you're saying is people are ready, they're just waiting.
Yeah. It's been climbing pretty steadily as the second largest cohort of Canadians, the baby boomer population, has started, I guess you call it early bequeathment, providing that money to their kids to buy a home rather than waiting until they pass away and doing it through their estate. This has become a bigger and bigger trend, so it's actually growing. And another thing that's growing that's unusual is we've got so many small businesses in the country. There's about $1 trillion in intergenerational wealth transfer we're expecting over the next 5 years. There's another 900 million, almost another trillion in business transfer from small business owners, a Subway store, maybe a law practice where the kid comes in to take over the firm. And that will surface capital. And I think this is at the heart of a lot of the affordability. It's why the home ownership rate in Vancouver is still 62%, despite home prices there. Yeah.
Okay, interesting stuff. Thanks for coming in. Appreciate
My
your
pleasure.
time. That was Phil Soper, CEO of Royal LePage.